So we saw some nice continuation to downside after the FOMC video that I made on Wednesday. We did have a gap up that day, but then it had a hard rejection yet again within this rising wedge right here, and continued down a lot lower to this 390-ish range, which then ended up prompting a bounce on Friday. And it seemed like a lot of people were getting suddenly very bullish again after just a one-day bounce. This is not as bullish as it may seem. This is a one-day bounce that we've had so far. We still are outside again of this rising wedge. If we do have a retest, let's say Monday or Tuesday of this week, which would be likely, of this wedge be around this 398, 399-ish level, then this is likely to prompt a rejection for further downside afterwards. So again, still with this bearish emphasis going into the month of April now, with a short-term target at the very least of around this 382 to 383 level. This is a retest of the downward trend line on the S&P 500. I remember we did retest it all the way back here on March 13th, which was my cycle date. If you remember this day specifically, this was the bottom date that we had. I talked about this in the weekly prep for that week, and this did end up prompting a bottom. And then I mentioned there would be some form of short-term upside afterwards, which was the case all the way until this FOMC meeting, which then prompted the next sell leg here, which I believe we were in right now. Despite the fact that there may have been a bounce on Friday, we still are within this downward trend and still would remain within this downward trend as long as we stay under this rising wedge, which so far it's been rejected 2 times off of this. As of recently, we had the fake out, or the fake breakout that is above the rising wedge during FOMC, and then it gapped up the following day back into the wedge, but it was unable to hold, which shows a lot of sell pressure in this around 398 to 402-ish level on SPY. Now this bounce occurred from the top of this demand zone range. This is the white box I have on here. We did have a nice bounce off of it on Friday. Again, it is more so of a corrective bounce as long as it stays below the previous rising wedge. So just keep this in mind. We still are just intermediate term wise within a downward trend that started all the way in the middle of February / early February around this time period. We are within this downward trend. We have yet to break out of the downward trend. We have to break out of a few trend lines in order to do that. One being this one right here. We had a fake breakout back here during FOMC, as you can see. I'll just make this a bit tighter onto the previous date for this pivot here, but we had a fake breakout during FOMC, and it seems like it's likely we will retest this level early this week, which I suspect will prompt some form of a rejection. And a perfect indication of a rejection would be a red close on Monday. I'd like to see that for confirmation of further downside throughout this week. Another reason why I believe will be rejected overall is just because of DXY. We saw a nice inverse head and shoulders pattern for this nice breakout after a hard sell-off previously, and this is a nice bottoming pattern that led to consolidation on Friday, which is interesting because the S&P 500 bounced on Friday, yet the dollar was not shaken up that much by it. We did have it close fairly strong in the day in this flag formation, which is likely to prompt more of a bounce going forward. And of course, when the dollar exhibits strength, we tend to see more weakness in terms of equities, which can weigh on the overall market. So I would like to see this have some form of a breakout starting tomorrow or Tuesday of this week. So do watch the dollar for confirmation. Also, if we take a look at what the whales were doing in terms of flow on Friday, you can see here for SPY and QQQ, a lot of puts near the end of the day. Seems like we had some form of a minor gap up here in terms of futures, but still, regardless, we saw a lot of these puts. A lot of them seem to be the May and June expiration, which has been characteristic of the entire past month. Any of the bullish flow we've seen has only been to about end of March to very early April. And we did see this 1.4 million call come in near the open of the trading session on Friday. This is for the 396 strike, and we did close right below 396. So this person was profitable in the end. But again, near the end of the day, we saw a lot of these puts hitting the tape. So it seems like the whales are still macro bearish on the market for that midterm to longer term thesis. And a lot of these were out the money by quite a bit, and also above the ask, as you can see here in the order details. So continue to watch these, especially if you see a lot of the consistent bearish prints throughout the next week. Also, another thing to note is the dark pool levels. We had 1.4 billion at the 393.41 level. This ended up being taken out during the day on Friday. As you can see on this mini chart here, we did end up continuing higher above this level, which would be more so bullish going forward. However, it's likely to be retested this week. I'd like to see what happens during a retest. We had some form of a bounce off that range, and that could be more bullish. But again, I'd like to see some form of a retest as of this week. If it breaks down from it, then you can see a lot more sell pressure going forward. But this is something I'm watching here. Will we be able to stay above this level from Friday? Again, 1.4 billion, not too much in terms of overall prints, but we've seen a lot of these high 380 to low 390-ish prints. So this range around the like 388 to 393-ish level, we've seen a lot of premium in that range. So it's very critical terms of a retest if we get this week, if bulls are able to continue to find strength and bounce off that level to continue higher. But some other prints just to look over here. If you look on Thursday, you can see that we did have 2.5 billion at the 392.24. So again, going off that lower 390 range, we've seen a lot of prints well above a billion. And just throughout the week, to give you guys a general sense of what's been happening, we saw at 1.5 billion at the 398 level. This is above the price that we closed on Friday. So this is another level that would have to get taken out if you wanted to have more of that bullish emphasis going forward. This happens to be right near the top that we had around that FOMC date. So this is a very critical range. Again, bulls, you would like to see a clearance above to continue for a lot more upside. Otherwise, we still are below and still remain in this downward trend that we are in right now. And if you go back to Tuesday in terms of dark bull prints, you can see here 3.6 billion. And again, the low 390s, we're at the 393.63 level. So we were able to get above in terms of Friday, but very crucial, at least for bulls, if you want to see continued upside, you want this range to hold, especially those 392 to 393-ish levels. We've seen a lot of those from this past week, so you want that to hold for further upside. Again, for bears, you do want to see that break down as early as this week for that more downside into the mid 380s again for that retest of the downward trend line. So one more day here, just on Monday of last week, we saw 2.1 billion at the 390 levels. So again, a lot of these prints around that 390-ish level. Continue to watch that range. If it prompts more and more bounces, that can signify a lot of strength in that range, which could lead to some more upside. Otherwise, bears, you do need to get back under that for there to be more extended downside. So some analysis here for you guys in terms of dark bull prints that we saw from this past week. And going back to the chart over here, one last thing I'd like to point out is Apple's chart here. Apple was actually able to stay above this supply zone as of last week, which is actually semi-bullish, at least for the very short term. Still bearish for the overall outlook on Apple. But one thing to note is this macro trend. You can see the macro channel that we've been trading within for a while now. This is the lower trend line down here, and then of course the upper trend line above here. And we're getting very close to a retest of this trend line. If this were to be the case, do expect sellers to step in around this range. It has prompted pretty substantial sell-offs each time we've seen a retest of this. So all the way back from here, end of March last year, we actually saw a retest of this level. And then same thing all the way in the middle of August, we saw a retest. And each time it has prompted a reversal to the lower end of the trend line. So a pretty substantial macro channel that we're within. But if you do see a retest of around this level, this would be around this 164 to 165-ish range. Do expect sellers to step in. So it does seem like Apple is getting near to a major topping level right now, which of course will have implications on the general market if it does end up reaching that fairly soon. And other than that, we still are between both this demand range and also supply zone from up here in this purple box. So it's kind of chop in between here. But once you see decisive move to break either side, my bias being a break of this demand range, then we will see an acceleration in that direction. So that's something that I'm watching for. As of now, a little bit more so chop in between this range, but do watch for some form of a rejection if we do retest this rising wedge / this trend line right here for this week. And other than that though, appreciate you guys watching this video, and I'll see you guys Wednesday.